Welcome to today's market report.
The pound sterling has experienced volatility in response to the US Q4 GDP data, which showed a 3.3% expansion in the last quarter of 2023, surpassing expectations. Strong UK PMIs have led to heightened expectations of hawkish guidance from the Bank of England, with market participants anticipating a steady interest rate decision but keenly focusing on the interest rate outlook. The GBP-USD pair remains in a sideways trend, reflecting market uncertainty and anticipation of upcoming policy decisions from both the Fed and the Bank of England. The pair has been characterized by flat range trading, particularly since December, and this pattern is expected to persist. Analysts observe the pair is currently trading within a broader 126 to 128.25 range. The US stock market, led by the S&P 500, has been on a remarkable ascent, reaching record highs and significantly outpacing its global counterparts. In 2023, the S&P 500 saw a 24% gain, continuing a decade-long trend of outperformance. This surge has widened the valuation gap between the S&P 500 and MSCI index, which tracks stocks in over 40 other countries, to near its widest in over 2 decades. The S&P 500 trades at nearly 20 times forward earnings estimates, substantially above its long-term average. Despite these high valuations, investors are drawn to US stocks due to stronger economic and earnings prospects compared to Europe and other regions, as well as the heavy weighting of technology companies in the S&P 500. Vanguard's projections suggest a more subdued return environment for US equities over the next decade, compared to international markets, with annualized returns forecasted to be lower in the US than in non-US developed and emerging markets. The euro-dollar pair is influenced by the cautious ECB stance, coupled with stronger than expected US Q4 GDP growth, which supported the US dollar. This is today's market report. Thanks for listening. We'll see you next time.